heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
Live from New York and San Francisco, this is Bloomberg Technology. Coming up, technology stocks, they jump on cooling inflation, but Citi strategists still see a risk of a sell-off. We discuss.
Elon Musk pitches himself as government spending tzar in an hours-long glitchy Spaces on X with former President Trump.
And Google's gadget game, we discuss the search giant's latest handsets and AI goals. But first, let's check in on these markets. And we are on the up. The up and the up when it comes to the NASDAQ 100. Why? Cooling inflation signs. PPI data today signifies that. Tomorrow, we have all eyes on CPI, and we're managing to crescendo up more than 5.5%, let's call it, at the moment, over the course of the last 4 trading days. Ed, what are the key stocks that drive us higher?
So these are 3 names that also just happen to be the biggest points drivers to the upside on the NASDAQ 100. Tesla is higher. We will talk about the focus on EVs between Musk and Trump in that Spaces. Also taking a look at Nvidia, on track for its biggest 2-day jump since late May. I don't think we can talk enough about this, even though earnings are still far away, August 28th. And then Starbucks. Okay, Starbucks is not necessarily a technology company. Laxman's out as CEO. The Chipotle CEO has been brought in. Maybe there's a digital story there, but it is the biggest points gainer on the NASDAQ 100. And frankly, on social media, Starbucks is a lot of what everyone's talking about as well. And look at that gain, 22% on a new CEO. Interesting.
Got to talk about it. Meanwhile, though, let's just get back to our core of tech stocks. They are jumping, but there is still this warning from Citigroup that caught our eye. Stocks could come back under significant pressure, basically on any negative economic data. That's as investor positioning remains extended on the bullish side, despite, of course, what has been the past month's sell-off. For more on these markets, let's bring in Callie Cox, Chief Market Strategist at Ritholtz Wealth Management. So it's interesting. Citi is pointing out here this $22.5 billion worth of long positions still out there tracking the futures on the NASDAQ 100. Why are we still seeing these long bets? Are they right to be long at the moment?
So sure, I think we agree with Citi there. I mean, tech stocks have had a stellar year so far, minus the last month. And, with so many economic conditions changing, with the expectation for interest rates changing, we think there could be more volatility there just because tech has been a victim of its own success.
So to that end, do people reposition? How would you, if you found yourself generally long some of the big, mega, well, the Magnificent Seven, shall we still call them, how do you reposition that? Should you reposition that?
So look, we're a big believer in tech. It's hard not to be, but we also believe in risk and managing a portfolio that helps you get from point A to point B in the smoothest way possible. So we've been talking to clients about rebalancing out of tech, selling a little bit of those tech shares that have done so well this year and looking at, potentially smaller stocks, mid-cap stocks, and looking at those rate sensitive sectors outside of tech.
Callie, I don't apologize for this. We were sharing shares of Nvidia, earnings are August 28th. How anxious a period of time will it be for financial markets until that earnings print?
Well, I apologize about that. I think that's on a lot of investors' minds right now. I know that's something that we're watching. Just because Nvidia shows that it can beat any kind of expectation you put out there over and over again. It's really the hot stock when it comes to fundamentals within the tech sector. The bar is a little bit higher. The bar in general has been higher for tech earnings this season, but the AI story is still quite real. I think my question is, what kind of guidance are we going to get out of Nvidia? How are investors going to digest a sales and earnings estimate beat if bad guidance comes on the back end? I think the AI story is just a little complicated right now. I think it's lost a little bit of its luster.
I think I'm right in saying, Callie, that you're probably in the camp of investors that look at the technology sector, particularly cyclical areas of it, maybe the chip space, and say growth cycles come and go. I get that. But what if the growth cycle goes with Nvidia? It's not like Jensen Huang to, give a modest outlook, I guess, is the lesson we've learned so far because his company's performing. But there is a scenario where he says, actually, things have slowed down.
Yeah, it's a great question. And I have to remind people too that NVIDIA is just one player in the semiconductor sector. Obviously its fundamentals have been incredibly good, but we still don't know who the winners are when it comes to AI, when it comes to the AI story. And we could see other, chip makers take some of that market share away from NVIDIA. I think if Jensen does come out and say that, growth isn't as great as we're seeing, or growth hasn't been as great as we've seen in the past, I think investors could get a little bit worried there. And that's a reason why you should maybe, rebalance some money out of tech. The expectations for the tech sector are just so high right now that it's hard to see tech beating those for a while.
Callie, it's interesting that while we have one side of Citi's mouth saying that we're thinking we've got a big exposure to a downside risk if we do get some worrying economic data, on the other side of their mouth, they're speaking about Citigroup analysts of basically buying the dip in chip names in particular. They still like NVIDIA. They're thinking maybe some other key names could be a broadening out because, look, when you look historically, other banks have shown that we've had 4 quarters of an upcycle for chips, but actually usually lasts about 10 quarters. How do you remain exposed without perhaps just keeping on betting on the same names? How do you take profit but still diversify within technology?
You do it carefully. And look, before any conversation about rebalancing, you have to realize what your risk tolerance and time horizon is. If you're looking at a 5 to 10 year time horizon and you're really excited about AI, then hey, any sell-off that we see in the tech sector, especially here, could be an opportunity for you. You just have to potentially wait it out a little bit. In terms of rebalancing, we like slow and steady, maybe selling a little bit here and there, revisiting your targets when it comes to single stocks that you're owning and sectors that you're owning, and just understanding that there's a market outside of tech. And, there are some exciting stories in other sectors. I know we're on a tech show right now, but, tech
nothing
is exciting.
Else matters, Callie. Nothing else.
Nothing else matters. But over the next year or so, we could see some other stocks take leadership. And in fact, we're already seeing that.
Here on Bloomberg Technology, Callie, I like to ask about the Fed, if I may. After PPI this morning, what's the Callie call on what the Fed does? Because, as we say on this show, higher rates discount the present values of future cash flows. And when you're a technology investor, that's important.
So the Fed looks like it's going to have to cut in September. CPI data confirmed this morning. PPI data confirmed this morning. I mean, we saw quite a drop in services PPI, or a slowing down in services PPI. And that just boosts the story for inflation getting lower and lower and close to the Fed's target. And if the Fed does start cutting rates in September, we could see investors' behavior around tech stocks change. I'll be honest, tech stocks are growth stocks, but I think that there are a lot of flavors in the tech industry and investors are looking at them quite differently. So if we see growth maintain, but we see rates come down, I actually think that this rotation out of tech could continue, this rotation into rate sensitive sectors. But you have to remember, if we do hit a rough patch in the economy, some of the strongest stocks on the market are tech stocks. So investors could look at those as a recession trade of sorts.
We got all the flavors of technology here on Bloomberg Technology. Take your pick. Callie Cox, Chief Market Strategist at Ritholtz Wealth Management. Thank you very much. Now, coming up on the show, Elon Musk sat down with Donald Trump for a wide-ranging interview, which he called more of a conversation, last night on an X Spaces. We'll discuss. This is Bloomberg.
I think it would be great to just have a government efficiency commission that takes a look at these things and just ensures that the taxpayer money, the taxpayers' hard-earned money, is spent in a good way. And I'd be happy to help out on such a commission.
I'd love it
if it were formed.
Well, you're the greatest cutter.
That was Elon Musk taking the opportunity to pitch himself for a role in a second Trump administration on last night's eventful Spaces with the former president. Bloomberg's Max Chafkin of Elon Inc. joins us now. And I mean, there's so much to recap. For me, that was in the context of an election cycle important, like this idea that Musk would maybe have a role if Trump were re-elected to the White House. And Musk also was at pains to kind of clarify his own politics. You tuned in for many hours as well. Let's start there.
Yeah, I mean, nearly 3 hours long with the lengthy delay. There were a long bunch of technical difficulties that caused it to start late. I mean, in terms of the sort of Musk-Trump relationship, what I heard was Musk being extremely deferential to Trump in a way that is pretty unusual for him. He's obviously a combative guy. I mean, not only was he kind of asking for a job, but he was nodding along during lengthy sections where Trump was seeming to downplay climate change. Musk has a lot to potentially gain here beyond, of course, potential employment. Tesla and SpaceX both have a lot to gain by a friendly regulatory environment, both in terms of subsidies, government contracts, as well as, potential regulation or lack thereof of things like the potential robotaxi.
Let's just go into that awkwardness around climate change and the fact that he calls himself sort of, well, you can be an environmentalist, you can still do good for the planet, but not have to sacrifice on ultimately a great car, was kind of his pitch to a whole new audience.
Well, weirdly, that has been Musk's pitch for some time, almost from the very beginning. What was different was his willingness to kind of go along with the idea that climate change is not existential. Back during the early days of Tesla and especially during the Obama years, Musk would emphasize that the planet is running out of oil, that climate change is a really big problem. Trump during this space said, we've got 500 years as long before we run out of oil. Climate change is not that big a deal. We don't need all electric cars. These are all things that at an earlier time would have really set Elon Musk off. And he has, navigated to a slightly different position, a position that is definitely much more accommodating of kind of right-wing skepticism of man-made climate change.
Max, electric vehicles were discussed. Actually, I want to bring some news this morning to our audience that in response to the spaces last night, the UAW, the United Auto Workers Union, filed a labor complaint, a practice charge against both Trump and Musk. And I'm summarizing, but they basically said that during the course of that conversation, the two men illegally intimidated union workers. Actually, Musk literally 30 seconds ago responded on X, which we'll show as soon as we got that in a second. Combine all that, please. It's difficult, but that news this morning with what was said about EVs and unionized work.
Well, we actually heard it in that clip you played, that bit about him being a great cutter. That went on. Trump said, your workers went on or threatening to go on strike and you just let them go. The UAW has already cut an ad about that. And of course, this could become politically difficult for Trump, who's trying to cater to working class voters in swing states, especially in the Midwest, where unions definitely hold sway and where at times he's seemed to make up some ground. And of course, it could be an issue for Elon Musk because the UAW is trying to unionize electric vehicle manufacturers and has signaled its intention to do so, although it doesn't seem like has made a ton of progress yet.
So we know what we did here around EVs and around, well, as you said, basically sort of a cozying up of Musk to Trump. What we didn't hear was anything about crypto. Did that surprise you?
Well, I mean, it's surprising in the sense that Elon Musk has kind of expressed affinity with the kind of crypto community. There's a lot of overlap between fans of Elon Musk and fans of Bitcoin. But, Elon Musk's never been totally a crypto guy. He's more somebody who seemed like he has a desire to kind of graft himself onto a popular movement. So in that sense, no. But what we did here was, kind of a pitch for the Boring Company, Musk's tunneling venture, as well as Trump suggesting that he might be open to expanding the Boring Company's operations, praising Musk's tunnels in Vegas, as well as Ed said, this kind of more muted praise, kind of almost like backhanded compliment for Tesla's cars. Trump saying they're good, but not everyone needs an electric vehicle.
The nuances there. All over Elon Inc., as always, I'm Max Chafkin. We thank you. Look, as we referenced at the very beginning, though, there were some technical glitches during Musk's conversation with Trump last night on X Spaces. Musk actually blamed the delay on a cyber attack, and he didn't provide any evidence, and then went when the event started to sort of suggest that Trump's opponents were responsible. Just take a listen.
We unfortunately had a massive distributed denial of service attack against our servers. As this massive attack illustrates, there's a lot of opposition to people just hearing what President Trump has to say.
Let's get an expert on DDoS. Brian Palmer, CEO of Trellix. Brian, did this seem like it was a cyber attack?
It's possibly a distributed denial of service attack, which is a malicious attempt to disrupt the servers. That is one possibility. There's a lot of reasons why servers and a system could go down. I don't have any insight directly, but it is a possibility.
A senior source at X last night told me that it was definitely a DDoS attack, but The Verge reported, citing staffers, unnamed staffers, that it was not a DDoS attack. Regardless, what did it tell you about the strength or fragility of X's security and its systems?
Yeah, I wouldn't speculate on whether it was or it wasn't because I'm not involved in the investigation. What I can tell you is that around election time, 50% of the world is going to have elections this year. What we do know is that distributed denial of service attacks are on the rise, and they are used to disrupt campaigns. They're used to disrupt elections. So it is plausible. Like I said, I don't have any details on the investigation or why this particular incident happened at X.
Brian, I'm sure with Trellix, your job is to ensure that despite such events, websites, live streams remain impenetrable. And I'm interested as to whether this can be a case, because this isn't the first time that we've seen some really awkward, embarrassing delays to certain spaces. And I'm wondering what could have been done to prevent a denial of distribution service attack occurring in this particular way.
Yeah, these attacks are very serious. They happen at scale. They happen a lot of different ways. They can happen through volume by just sending so many packets and by using botnets and zombies. So these can be very powerful, and many companies have suffered. We know just recently on July 30th, the Azure platform suffered a distributed denial of service attack and was down for about 6 hours. That impacted the Starbucks app and Outlook and Minecraft, some other things as well. So these attacks are pretty sophisticated, especially when they're being played out by adversaries who are very skilled.
Brian, the FBI said that it's investigating allegations made by the Trump campaign team about documents accessed from the campaign during an attack in the last week or so. Have you followed that case study, and what do you make of it?
I followed it. I heard the reports. I think what we have to do is let the FBI do their work. They've got some great cyber professionals who are going to do an investigation. Again, we know that in election season, all elections, we saw it recently in France, there was a distributed denial of service attack launched by Russian hacktivists on the French government during their election. So this is something that's happening. The specific cyber attack that you talked about over the weekend, I'll be interested to see what the FBI uncovers in their investigation.
I mean, Brian, we're also so fresh in our mind of how a lot of our lives and flights got put on ice a few Fridays ago because of a CrowdStrike issue. And actually, when that happened, Elon Musk went on to X and said, look, he's ditched CrowdStrike. And I'm interested that you actually said at the time, you told Bloomberg that you understand why, and you'd welcome Tesla CEO as a customer. Have you been approached by Elon Musk?
Sure.
Wanting your...
No, I haven't talked to him at all, but obviously we're a leader in cybersecurity, and if they need some help, my offer stands. We'll do whatever we can to help out X and Elon.
Brian Palmer, CEO of Trellix, thank you very much.
Time now for Talking Tech, and first up, Polish billionaire Rafał Brzoska takes aim at deepfakes, holding Meta accountable for fake ads on its platform that use the likenesses of famous people. Look, the founder and CEO of InPost won an injunction last week temporarily banning Meta from publishing fake ads using the likeness of him and his wife, who's a local TV celebrity in Poland. Brzoska is now waiting on a similar order in Europe from Ireland's Data Protection Commission. Plus, Singapore's Sea Limited, it raises its outlook on e-commerce strength. The company is actually saying they expect sales of goods to rise in the mid-20% range, exceeding the high teens they saw in March. Second quarter profit and sales also topped analyst estimates. And investors, they're anxiously awaiting Alphabet's Google Pixel event. It's happening today. The tech giant is set to debut new hardware and software. And look, traders are hoping that the introduction of new AI features to the redesigned Pixel phones, could help stop what has been a massive sell-off. It's wiped off $360 billion in market value of Google in just 1 month. Ed, more on it.
Yeah, this is worth talking about and thinking about what we can expect from the Google Pixel event. Let's get to Bloomberg intelligence analyst Anag Rana. We have this pie chart and it tells the story of where the Pixel or handset sales sit within the bigger picture over the last 4 quarters. And frankly, Anurag, the answer is they are a small percentage of revenue. So why is success with the Pixel important?
I mean, it really has to showcase the software. I mean, the hardware doesn't really matter because remember, most of the phones in the world are Android phones at the end of the day. So if Google can showcase what Gemini can do on their device, I mean, it really changes the narrative for high-end Samsung phones over the long term. I mean, this is something that then Apple has to deal with, next month.
Mm-hmm. What's interesting, of course, is the fact that tie-up between OpenAI, ChatGPT and Apple is somewhat delayed, and how much, therefore, integral, how much of a boon to Google is it that they basically have their own underlying large language models?
See, at the end of the day, people are not buying phones so quickly or moving around because of one large language model or the other. But this is really a fight between the 2 biggest large language models that's out there. One's OpenAI, the other one is, Google's Gemini. And at the end of the day, Google has to showcase that they are actually better, not even closer to OpenAI. And these kinds of events are a chance for them to showcase that, at least when it comes to on-device inferencing.
Let's focus on that. Bloomberg Intelligence has done deep analysis into generative AI. What is the future of using generative AI tools or smaller models on device, Anurag?
It really makes it what I would call as the hyper-customization of smartphones, where your smartphone behavior is going to be very different than mine. You can do a lot of things that an assistant can help you with from anything from booking airline tickets to maps, all those things, but you require something that's on the device. And both of these companies are really championing that they will be the first ones to achieve it. Now, Apple's going to launch a new phone. They really have a long to catch up.
Bloomberg's Anurag Rana of Bloomberg Intelligence. Thank you so much. Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco.
And I'm Caroline Hyde in New York. Quick check on these markets because we are up and to the right when it comes to the NASDAQ. In fact, we're out of 4 straight days of gains. That's the longest winning streak since July the 10th, more than a month for the NASDAQ. So we're managing to see once again a bit of a risk-on attitude to the market after last week's absolute turmoil. But bond markets really getting a bid as well. Yields crushing down on the front end, 2-year yields as we see off by about 6 basis points. Why is that? The PPI print. Basically, inflationary data is coming in and giving us the comfort that inflation is being tamed. What does that mean for CPI print tomorrow? What does that mean for the economic market reactions that we're seeing? Bitcoin currently up more than 1% because the dollar is down. Move on to the individual movers for a moment because that's the macro. On the micro side of things, we are looking at Nvidia just on the higher side, more than 5%. Of course, all eyes on that's earnings, but really we're seeing a buy the dip moment in some of these chip makers. We're also seeing it spread out to the likes of Broadcom, up more than 3%. We're seeing some 13F filings come out. Some hedge funds are buying into this particular name. And I'm looking at Tesla because we are still up more than 4%, even though you singled out what ultimately is some fighting talk coming from the overall association that focuses in on United Workers for automobiles, saying that we don't like what was said between Trump and Musk yesterday on that Spaces, Ed. But we are seeing at the moment Tesla getting a bid. Maybe Republicans are going to be buying EVs more. Let's listen in.
Yeah, I think there's a lot to discuss in the markets in the short term and the long term. Let's get into it with Gil Simon, Chief Investment Officer for the $2 billion hedge fund Soma Equity Partners, which makes concentrated long and short bets on tech, media and telecom companies. The fund's up about 4% this year through June. I'm also joined by Bloomberg's Hema Palmer, who covers this space very closely. Gil, good morning to you. Welcome to the San Francisco studio. I want to start with AI broadly because it's what everyone's talking about. But you have this thesis that in terms of earnings revisions or something tangible that all the investment's worth it, that shows up in hardware names. I don't see too many hardware names that you're holding. Explain that to me.
Yeah, so our focus has really been historically on software and internet companies. That's primarily where kind of our sources of differentiation have been, just in terms of our own research and experience. We've owned some hardware over time, but one of the things that we've found difficult is just with the predictability of this early AI investment wave. And so we're looking for really durable beneficiaries of AI, and so we think we've found many in both the infrastructure and application layers. And so while it's been unfortunate to miss, like, say, NVIDIA, we think it's very difficult to predict just how their fundamentals play out over the next couple of years. And so we're happy with our strategy and focusing on what we know best.
And Gail, one company that you invested in that you're long is Rivian. Now, this is a stock that's been under pressure, down 42% so far this year. You think over 2 years the stock could hit $50 a share. It's currently trading around $13. Explain to us your bullishness on this company and how much of it is riding on this deal with Volkswagen.
Yeah, so great question. So I've noticed a lot of the conversation this morning has been about Elon and EVs and Tesla specifically. I think the market has really started to look at Tesla as kind of the only real winner in EVs in this country. There are some big Chinese companies like BYD that are successful as well. But we've really kind of tainted any other secondary players in EVs into like this, dustbin of unlikely, kind of unviable companies. And we think Rivian is emerging into its promise as being the number 2 EV player after Tesla in the West. And so this deal that they just announced with Volkswagen about 6 weeks ago, we think is a massive validation of their position. Volkswagen is investing an aggregate of about $5 billion that will flow to Rivian. Rivian's only a $15 billion market cap today. Compare that with Tesla at $7 or almost $800 billion. And, Ed, just being here in San Francisco, we see a lot of Rivians out on the streets. It's very reminiscent of when Tesla started to get traction with the Model S. Rivian's roadmap is very much following in Tesla's footsteps, going from selling $100,000 kind of high-priced cars to a mass market, and the R2 and R3 models, which Rivian announced are going to come in 2026.
I'm just going to jump in here. So as you know, I covered Rivian really closely for a few years. The VW deal was big. I've written that RJ Scaringe has been a so to speak unreliable boyfriend. The Mercedes deal didn't last long. Ford never materialized. But it indicates that Rivian can't do it on its own. Is that fair?
So I actually think it's slightly different. I think the view that we have is that the legacy car industry is really struggling with the transition to modernizing their vehicle production. And so there are a couple aspects to that. One is the legacy car companies are really good at a couple things. They're good at outsourcing and they're good at marketing. They're not good at vertical integration and they're not good at software. And so if you look at even Ford's last earnings call, one of the things that their CEO called out is that Tesla and Rivian, those are the two companies that he called out, are really the only two companies that have developed a kind of new technology infrastructure that really modernizes the experience for customers. One of the important things now as a customer is, and I have both, I've had a Tesla for a long time, you expect to get over-the-air updates to your car. You expect to be able to access your car through your mobile phone. And those over-the-air updates are not just to the user interface. They're to the suspension system, the braking system, which requires a lot more integration. So we think the Volkswagen deal is like a real turning point for the industry, in that Volkswagen, which owns Audi, Porsche, Volkswagen, Lamborghini, they want to infuse all of those platforms with Rivian technology. And so it opens up this new paradigm in the automotive industry where you see that the legacy OEMs might need Rivian as a supplier of technology and software, which is a new angle to this story.
And given, the developments that we've seen, it's still been a pretty volatile stock. How do you hedge against that volatility in your portfolio?
Yeah, so we've used the volatility to our advantage. So the company, if you remember, came public in 2021. It was one of the biggest IPOs in history. I think came out at $100 billion valuation because people perceived that it could be the next Tesla. Several years later, that promise, the roadmap is starting to come into view. Obviously, that was very early for people to think that far out. But we've used that downside volatility to our advantage. So we've just purchased the stock in the last 6 months at around these levels. And so we're very happy taking a position in Rivian, using the downside price action to our advantage to be long-term investors to see what this company can become.
What's interesting, one of your other key holdings is also impacted by Tesla in many ways, and that's Uber. That was the robo-taxi read across. I'm really interested in your ethos and focus on Uber and why you're so committed to the name.
Yeah, so it's a great question. This year, in spite of Uber putting up tremendous fundamentals, one of the big overhangs on the stock has been Elon's commentary and plans around robo-taxis. So this has been a big debate in the stock market, and we actually think, we're very convicted, in fact, that AVs, autonomous vehicles, actually will go through Uber's platform, not around Uber's platform, meaning that today the biggest player in AVs is actually Waymo, and Waymo is partnering with Uber in Phoenix, and we are anticipating potentially an expansion of that agreement. Because if you think about Waymo going direct to consumers on its own through its own app, it doesn't have nearly the exposure or distribution that they get through Uber. And so to better utilize their fixed capacity of cars, they are partnering with Uber to generate better utilization. We think that that is a very important understanding to really understanding how AV companies that have autonomous functionality will leverage Uber's distribution to achieve better economics. Now with robo-taxis, one of the big knocks that we have is, again, as a Tesla owner, the dream that I can push a button and let my car drive around and generate revenue for me sounds great, and we love Elon's long-term visions. But we also think that it's a bit naive and that the number of customers that are likely to push that button and let their cars drive around with strangers in the back seat, there are just a lot of real-world kind of considerations that we think make it still very far from happening.
The real-world driver is, of course, artificial intelligence as well, Gil. I go back to that as a driving force of what names you get in and get out of. Because where are we undervaluing the impact of artificial intelligence in certain applications and names?
Yeah, so, we own many companies. So, Ed pointed out that we don't do a lot of hardware, but we own a lot of companies that we expect to benefit significantly from AI. Obviously in the automotive space, AI, we really talk about autonomous driving, and that's why it's important for us to have a view on Uber and whether AI is a benefit or a hindrance over time. But there are a lot of names that we own in the infrastructure space, really in cloud infrastructure like Amazon and Microsoft, names that are known to everybody, but also Datadog in the software space, which is a little bit of a tie-on to companies that are investing in their cloud infrastructure. We also own a company that you wouldn't really think of as an AI beneficiary, which is Roblox, which I saw Bloomberg Intelligence actually put out a piece this morning talking about how Roblox is embracing AI to help their developers build games and experiences on the platform. So there are a lot of companies that are in the market, both enterprise and consumer facing. We just want to make sure that we're with management teams and companies that are on the front foot, that are looking to embrace AI in all of the different potential ways that they can.
Gil, joy to have you on. Come back soon, we hope.
Thanks so much.
Gil Simon, Chief Investment Officer at Soma Equity Partners. And we've got to thank our own Hema Palmer for helping bring that interview to bear. Meanwhile, coming up, we're going to be joined by, key focus of VC right now, Isabel Friedhelm. Is going to be joining us, founder and managing partner over at Athena Capital. Her take on the IPO market. This is Bloomberg Technology.
The IPO market is open. And if you look how the companies that have gone public, Rubrik and some Instacart and some of these other ones have traded, they've actually done remarkably well, but yet you wouldn't know that based on the volume, which is like almost dried up to next to nil.
That was Lead Edge Capital Managing Partner Mitchell Green on the show yesterday saying the IPO market is back or open, but not everyone agrees. So let's bring in Isabel Friedhelm for more. She's the founder and managing partner of Athena Capital, which is currently raising a $500 million fund focusing on private companies preparing to go public or considering another exit like M&A. So Mitchell says the IPO market is open. Do you think the IPO market's open?
I do think we are starting to see a recovery. The IPO volume in the U.S. is up in 2024, Q1, Q2, up about 12%. Proceeds are up as well, which is encouraging. And we're starting to see larger deals such as Reddit, Stripe on file, NVIDIA. And this is an indication that investors are starting to indicate interest in companies going public and in deploying capital into tech companies in particular. But they're nonetheless prudent. And that's why we're only seeing at this point still larger size companies because they have a better chance of success. And I think we're going to continue to see that for the remainder of the year with likely a higher velocity of deals in 2025 after the elections.
So elections is an interesting point. Something that Mitchell reflected on yesterday is it's very difficult to be a private company planning to go public from a regulatory standpoint. The paperwork involved, frankly. What do you make of that, particularly with your focus on taking companies that are currently private but thinking about jumping to the equity markets?
It is very difficult. Unfortunately, we are in a regulatory environment in which it is hard and expensive for companies to go public. In fact, we've seen over the last 30 years or so, about 90% decrease in the volume and the number of publicly traded companies. And unfortunately, Chairman Gensler has enacted almost 40 rules recently, and it is making it harder. It is making the U.S. less competitive, and it has repercussions that are both geopolitical and repercussions on our standard of living.
I'm interested then what to be done, because you've got such a wealth of experience when it comes to private equity, IPOs, but also SPACs. And many would say, look, the whole problem with SPACs was that there weren't enough investor protections in place. How do you make it less onerous, less expensive, but still necessarily protective, particularly of retail investors, for companies to go public?
What SPACs were, they were a symptom of retail investors demanding access to tech returns. For the last 2 decades, tech returns have been hoarded by the venture capital industry. So the Amazons and the Facebooks and the Googles of the world, those returns took place for the most part privately before the companies went public. And that's the case for many tech companies. And retail investors wanted access to those investments. And they're difficult, they're risky to make in the venture capital asset class. And therefore, SPACs were just a symptom of that. But beyond that, there needs to be easier access for capital formation for tech companies that are innovative, that improve our standard of living, because the venture capital that we provide is the lifeblood for innovation. And we in the venture capital industry exist for the exits. We fund companies because we know there's an exit on the other end. And if companies stay private for too long, we jeopardize the volume of the venture capital asset class.
So what, therefore, should we brace ourselves for post-November? Is it all AI names?
It's larger size companies in the short term, and it's going to be more innovative companies probably in the next couple of years. We're still seeing a recovery. We don't know when exactly, but it will happen. There's a big backlog of companies that want to go public, investors that want to deploy capital into those tech companies that are going to find solutions to climate problems, to drug developments, to payments, to many of the technologies that we use that, again, improve our standard of living. So we will see that happen. Whether it's 6 months, a year, 2 years, doesn't really matter, but it will happen.
Well, we'll see as and when that IPO window really does fly open as well. Friedheim, great to have some perspective, particularly on the SEC, founder and managing partner of Athena Capital. We thank you.
I'm looking at the crypto markets, Bitcoin in particular, trading just below sort of $60,000 per token because it was expected to, but did not come up in that spaces between Musk and Donald Trump. But Donald Trump has been talking about crypto a lot recently. At the Bitcoin 2024 conference a couple of weeks ago, he even promised to create a national Bitcoin stockpile with the cryptocurrency being held by the US government as part of his platform. Have a listen to this.
If I am elected, it will be the policy of my administration, United States of America, to keep 100% of all the Bitcoin the U.S. government currently holds or acquires into the future. We'll keep 100%. I hope you do well, please.
That July 27th statement alarmed a few former prosecutors, and that includes Amanda Wick, now a principal with Insight Consulting, who served as a federal prosecutor for the US DOJ for nearly a decade, and you specialized in money laundering and cryptocurrency. Why did that Trump position alarm you?
Unfortunately, it's one of the many things that he says that's either wrong, illegal, or not possible. And when he says he's going to keep 100%, I don't know that he realized that some of that money is from the victims of scams, hacks, ransomware. It has to go back legally. And it's been stockpiled largely because it couldn't go back due to some contracting issues. I think the concerning part is that Trump has a tendency to say what people want to hear and not necessarily what's even remotely feasible or legal.
Of course, this call is for a stockpile. The US holds, what, about $12 billion worth of crypto at the moment, variously Bitcoin, ETH, as well as Tether's stablecoin. Just go through the motions of how the US government decides as and when it should sell its crypto holdings to repay those who are the victims of scams or have had ransoms, for example.
Well, there's a process, and it's called the asset forfeiture process, and it's been established for years. The issue was that for several years, the process by which those funds would be liquidated or sold was held up due to a contracting issue that the U.S. Marshals was having. And only recently, on July 1st, I believe, was it announced that the contract had gone to Coinbase. And so this perception that the government was purposely keeping the funds was actually a contracting glitch, likely, in the sense that they were stalling. It was stalling in terms of their ability to liquidate it. But normally that process would be they would be sold and the funds would be returned to victims as part of the normal process of either a civil or criminal case.
Yeah, Amanda, I just want to level with our audience. We're talking about this because we thought it would come up last night between Musk and Trump, and it just did not. SEC and Gensler, that's the other side of this that you talked about firing Chair Gensler. The mechanics of that working and then trying to get a Bitcoin reserve. I'm just trying to understand process, why it would work.
Yeah, Professor Tanya Evans did a phenomenal article on this in Fortune, I believe, where she talked about the actual impossibility of firing him on day one. And I think, look, there were people actually placing bets on whether Trump would say Bitcoin or crypto last night. And I think it's a disturbing trend that he tends to take money from people who are willing to give it to him. And the crypto community has been battered for 4 years by the Biden administration. And they are only too happy to head towards somebody who's giving them positive indicators. I think the Harris campaign has been slower to give positive indicators. There is a group, Crypto for Harris, that is working on that and is gauging on that. But there have been positive indicators from the Harris campaign privately, just not as publicly as Trump. But I think the crypto community has to decide, do you want somebody who's saying what you want to hear, but it's not possible? Right. Or do you want somebody who's taking their time and deliberating what the policy should be because it actually has a chance?
Okay. Amanda Wick, Insight Consulting Principal and former federal prosecutor, we thank you. That does it for Bloomberg Technology.